Welcome to Retirementals, a podcast that dives headfirst into the issues facing the financial sector at the intersection of investment, technology, and financial advice. Hosted by Abraham Oksanya, you can expect raw honesty, critical analysis, and energetic interviews. Here is your host, Abraham Oksanya.
Hello and welcome to Retirementals. I'm Abraham Oksanya and I'm so excited about my guest today. There is a lot of talk these days around financial coaching, financial well-being, and all that stuff. But my guest today has been doing financial coaching way before it was cool, way before it became sort of the catchphrase that it is. My guest today is Simonne Gnessen, who is the founder of Wise Monkey Financial Coaching. Simonne, welcome to Retirementals.
Thank you very much. Lovely to be here. Thanks for inviting me.
No, thank you for coming on board. As I was saying to you before we went live, followed your work for over a decade, and I actually at some point considered coaching as a career, but that didn't turn out well. So I am really interested in learning about the work you've been doing. So give our audience a glimpse into your career, how you got into the coaching business.
Sure. So I started my career as a graduate training to be an actuary, actually.
Ah.
And I only lasted a couple of years in that, realized that it was years before I'd be client facing, and it really didn't suit me. Plus, I wasn't doing very well with the exams. But I sidelined from that into financial services. So it wasn't like many of us. I didn't kind of wake up one morning and think, "Hey, I want to be a financial advisor." But I moved across. I was working for a multinational pension consultancy, and I moved across to financial services and trained to be a financial advisor. And I loved it, and I took, it suited me very well, that kind of work. But I moved across from there to Fiona Price and Partners. I don't know if you remember,
Yes.
a team of women-only financial advisors specializing in advising women, which was really unique in those days. That was back in '94, I think, 96, something like that. And then I took a career break. So I'd done a lot of personal development and recognized that I wanted to make some kind of changes in my life. And I took a career break and I went traveling for a year, which was something, my biggest passion. And that was kind of my biggest passion fulfilled. And when I came back, I didn't want to make any compromises. So I went back to Fiona Price and Partners to see if that could be a company I would be prepared to work for again. But I didn't want to make any compromises. And I wanted to find a company that was really client centric. And that was kind of 20 odd years ago. And it wasn't that easy back then to find an organization that met my criteria. And I found a company that I worked with for a short period of time, and but recognized actually they changed their criteria very quickly because they brought in a sales director at the same time as bringing me on, and the whole ethos of the company became very salesy. And at that moment, I recognized that products was the problem for me. That really what I wanted to be doing was empowering people with money where it wasn't about their net worth. It was just about them as an individual. And I wanted to concentrate more on the individual rather than their money, if that makes sense. And I recognized that there was a massive gap. There's 20,000 financial advisors. There's if you're in financial difficulties, there's also lots of places to go for free debt advice. But what about everybody else? And the industry back then and nowadays is still very focused on high net worth clients. But what about people that don't meet that criteria, that don't have the investable assets to manage, that are mismanaging money, that have gotten themselves into bad habits, that maybe they just want some help and guidance to help them get on their way. And so I felt that there was a need that wasn't being met by the industry. And I also recognized that I wanted to help people. Why don't we do? I became really interested in the question, why don't we do what we know we need to do? How can I help people shift their behavior and help them address and manifest kind of money in a much more powerful way for them in their lives?
Incredible stuff. Talk to me a bit about how you made that journey, because you were there, a professional financial advisor, which is a well-paying career with a lot of opportunities, and you decided that you're going to go into something that, forgive me, nobody was doing, and set up a business around that. How was that shift? I mean, dare I ask, did you come out of means to be able to make that shift, or how did you manage that?
So I've never been driven by money. Like I left. Um, I was working for a pension consultancy, moved across to a company where I went self-employed, and there was no guarantee. And everyone said, "You're mad! You're giving up a final salary pension scheme, fantastic career prospects." But for me, it was always about the work. It was always about the interest in the work, and I was really intrigued in working with women and working with a different type of clientele, and making a more kind of profound difference in people's lives. And so for me, that was the drive. I'm not a natural entrepreneur. So it wasn't like, whoa, let's get started. I've got this great business idea. Let's try and. It was just that I felt a passion towards something that I couldn't ignore. I, there, I couldn't get my knee. I think it was probably through that journey of personal development that I was like, I kind of know who I am now. I want to do something with this. I've got some skills and experience, and I want to be able to empower people. I always work differently as a financial advisor anyway. My initial meetings would often take 2 to 3 hours. So I didn't, I other people would do their that first free initial meeting with somebody for 45 minutes. Mine, I always had a box of tissues on my table. We always had people always shared secrets with me and revealed their story. And I wanted to be able to do that in a more professional way and make that the ethos of the work I was doing, rather than anything to do with the kind of product side of it. Um, so it was never about how will I make this work. I mean, of course, I did the calculations and projections of what do I need to do in order to make this work, and the pricings, and but it just started slowly, really. And I did some part-time work, very something that wouldn't tax me in any way, so that I could focus on this. So I initially did 4 days a week. I was doing kind of power plan. It wasn't called power planning those days, but I was kind of doing a power planning role. And I did 4 days a week, then three, then two, then one. And then within about 6 months, I gave up that kind of work so that I could exclusively commit to this. And I was very lucky, because in the early days, I was the only one talking about this stuff. So I was a really lone voice. But it also meant that there was a lot of media interest. So I got the opportunity to do a double page spread in the Mail on Sunday, not necessarily my preferred publication, but I got a fantastic opportunity to put forward my work, and a couple of my clients also told their story, and that gave me. I remember it. I got 52 new inquiries from it, and at least half of those turned into clients. So I had quite a lot of clients right from the beginning, and also I had some people who came back to me from the days that I was their financial advisor, and now I was in a different guise, but still supporting them with their finances.
That's fascinating, and there's a lot in this that I want to unpack. I want to unpack the business side of things, and the pricing and all that stuff, right? But before we do that, can you define financial coaching for me, and how would you say it's different than financial advice or guidance or any of the other terminologies used out there?
Sure. So there's a few different ways that we can talk about this. So one is I often put up a Venn diagram where we've got three circles. One is guidance and advice, one is mentoring, and the other is coaching. So the advice we understand, albeit in my role, it's generic advice. So I can advise people on money management techniques. I can advise people on apps that help you track spending and that kind of thing. So there might be an element of advice, although that's minimal, really. The mentoring is helping people with spreadsheets and cash flow forecasting, and I've been here before and I can help you with that kind of helping somebody understand if they're trying to make a decision that has financial implications, doing some of the maths behind it, and helping them articulate what they're trying to achieve with a little bit of guidance from me, with a little bit of expertise. And coaching, pure coaching, your client is the expert, not you. So pure coaching, you're asking questions. You're asking questions that are thought provoking, help the client gain insight and understanding into their own map of the world, their own set of beliefs, their own assumptions, and action that would serve them. So there's a deep listening. Um, Powerful questions where you're teasing out information from the client to help them move forward and take action and understand themselves better. Does that make sense?
It
So
does make sense, yeah.
the financial coaching sits in the middle of that. So at times, it may be that you're working with somebody who has actually, the important point is you're also potentially working with a different type of client. So it might be that you're working with somebody who is hasn't got the financial results that they want in their life. You know, maybe they're earning well, but they've got nothing to show for it, or they've got actually quite a lot of debt. And the more you earn, the more debt you can actually acquire. And it may be that they're in a company pension scheme, or they're paying into a private pension, but they haven't got they're not building the wealth in the way they want to, and they know their habits aren't serving them. So they wouldn't ordinarily go and seek financial advice because they haven't got money to invest there, but they do need help when it comes to money, and they need help in understanding and unraveling their own relationship to money. So there can be some very deep work that you can do in helping them shift patterns of behavior and their mindset in order to achieve what they're trying to achieve. Does that make sense? So that's one aspect. And then, of course, you've got people that are trying to make decisions like, can I afford to privately educate my kids, or can I afford to take voluntary redundancy? And they might have been offered voluntary redundancy, and at some level, they know that there is no money in the world that would make them feel secure. And we know that there's an underlying it. There's something deeper for them to work on. And that's where financial coaching sits really well, where you can do some of the practical work. You can do the how much money do you need to be living on? How long will this money last? What are your other, you can tease out all of that, but also you can work at a deeper level in really trying to help them shift their messaging about money and their beliefs around themselves. And that's where you can make huge transformations in someone's life. And that's beautiful work.
Now, a word from our sponsor. Nikki Heaton-Jones is the Managing Director and the Chief Investment Officer at Betafolio, the high-tech, low-cost, discretionary model portfolio manager. Typical model portfolio service costs about 36 basis points. That's in addition to the funds, the platform, the advice fees. Tell us a bit about Betafolio's view and approach on fees.
Well, I don't think anyone that knows us already, Abraham, would be surprised to hear me say that in a nutshell, MPS fees are too high. if you include the fund charges and the platform fee that you already talked about, we get close to 1%, I think, on average for a lot of retail clients. And that's before they start paying for the financial plan, which is the part of the service that will ultimately add the most value for them in their advisor relationship and experience. So, I mean, my view on fees and Beastfolia's view on fees is that they have a real impact on client outcomes that needs attention. And that's why we're building a scalable solution with technology that will allow us to keep costs low. And I think we also should consider the impact of these fees on advisors' businesses too. Advisors need to make a profit from their work. They need to have a viable business, and their cost bases have been rising because of regulation, and the more cost they have to pass through to their clients for overcomplicated services in turn puts pressure on the advisor's own fees and ultimately makes it not possible for them to run a good business. So fees are really crucial, and I'm really happy that we're in a position to be having a positive influence on the trends in the market.
Good stuff. Thank you, Nikki. How do you train for this, right? What sort of training do you need to actually legitimately call yourself a financial coach? And that question is actually coming honestly from a place of cynicism, right? You know, we have different sorts of coaching around today: career coaching, you know, business coaching. I am a business person. I am immensely cynical about business coaches, right? You know, and I think probably that would translate to career coaching as well, probably arrogance as well. But my point is that you were talking about all the deeper issues, shifting behaviors, you know, all of these things that maybe I am wrong, I could be wrong, but are bordering on around psychology, you know, therapy, all these sort of things. And I'm sitting there and thinking, what kind of training do you need to do this stuff?
Well, also don't forget that within our role, we're mostly listening partners. So we're holding the space. The biggest input is really holding the space for somebody to understand themselves better, to hear their own thoughts, to understand their patterns of thinking and behavior, and then articulate that and identify ways that they can do things differently. So we're not there saying, right, this is what you need to do. You got your pen and paper at the ready. And this is, and we're not therapists. So we're not going back to the past and I mean, of course, we are to some degree asking them about their messaging around money and their belief systems, but we're not analyzing them. We're not the solution providers in that. We're holding the space for them to think and talk and articulate and identify and gain insights and identify action that would serve them better. So that's one thing, is that we're not pretending to be therapists, right? And some people I'm training people to become financial coaches. Some people come from a therapeutic background. Some people come from an advisory background. Some people come from they might be an accountant or have worked with people in finance, but not necessarily within their personal finances, and all other kind of backgrounds actually. But so that's one thing. So with coaching, there is when you're coaching, you're not the one providing the solutions, the client is, right? And so when I originally started, I did some coaching training, and I also trained as an NLP practitioner,
Right.
and then became a master NLP practitioner. So I apply that also to my work. And I know that you asked me about kind of the George Kinder training, and I did George Kinder's training also, and I've integrated that into my work too. For the training that we deliver, we're offering kind of 54 hours of live training sessions. There's coaching practice within that. There's additional sessions outside of the training room where people get to practice. There's case studies. So we're generating a training that gives people the experience. So the theory, but also very experiential. They get lots of practice in coaching real life kind of case studies and coaching each other. So it's giving people the experience in order to fulfill that kind of role. And then we're also now moving the training towards a coaching and mentoring qualification. So we're not,
Right.
this isn't ready yet, but so it would be that there would be a proper coaching and mentoring qualification that would a pathway to that within the training. So with a coaching and mentoring qualification, with the training and the hours of practice, you've got the credentials to fulfill that kind of role. But we're not trying to be, we're holding the space for the emotions to be revealed, for people to work through their blocks and understand themselves better. But we're not the solution providers in that, if that makes sense.
Understood. And how much of financial um, financial is involved in the coaching, so obviously the coaching which focuses on listening, questioning the individual, but also then this is still financial coaching as opposed to say career or business coaching. So I guess my question is how much of that advice, generic advice and guidance is involved in the training for the coaches.
Yeah, so I mean, in terms of everyone's individual practice, it's different. Some people will focus much more on the coaching,
Right.
and it will be almost entirely helping people budget, manage money, and their relationship to money. Others will be much more concentrating on the education side of it, the mentoring side, which may they may come from a financial services background or have a deep understanding. So we have in our training we have in the live training sessions we don't we do modules on money management and debt management, but we don't train on pension, savings, investments, etc.
Right.
But we do have a pre-course called Personal Finance Seminar Series, which we get people to go on who haven't come from a financial services background, and so there are seminars that they attend prior to attending the training. So that's the kind of where the financial content is taught for those that don't come from that background.
Makes sense. And do you see this as there's a lot of talk in the financial advice space about using coaching skills, to understand the client's, drive, goal, aspiration, mistakes, money mistakes, and things like that. And a lot of planners that I know, or many planners that I know, do this, but it ultimately then leads back to investing, savings, and all that stuff. So I guess the question is, do you see coaching as almost invariably leading to financial advice, or does it stand on its own? Because my point is, my maybe I'm not trying to ask the question and answer it, right? No, I guess just answer the question on that basis. Do you see it as a natural step before advice?
Yeah, so I take your I'm understanding what your question's about. I think that first of all, it can be a standalone,
Right.
as in you might have somebody that's a DIY type investor, but they've got some habits and behaviors that don't serve them. They want to understand what's getting in the way. or they want to kind of understand the landscape a little bit better. Of course, we have to be very cautious not to step into the regulatory space. So there's that. It could be a support to people that don't seek financial advice ordinarily or don't have the resources to seek financial advice. But it can also be a stepping stone into that world. So, for instance, if you've got somebody, I might be working with a client who's recently inherited money, and in fact, it scares them. Like this is it. This is money that was received from my father, and he put the fear of God in me about this, and I feel like I've got to be a caretaker to this, or they feel that it's now created such a difference between me and my partner and my friends, and I feel uncomfortable, and I don't like the disparity of wealth and all those things that there's no way they could go straight to see a financial advisor. They need to unpick and unravel all of that first. So that could be a stepping stone. Also, in helping people understand the whole arena of financial services, where you've never had to tackle this before. It's frightening. Like, who do you go to? I've suddenly got this money. How do I know who I can trust? So it can be a stepping stone into that world. We can offer guidance and education, even in terms of how financial advisors work. Sometimes I'll draw up a spreadsheet and we'll kind of draw out all the criteria that's important to you within this relationship and the types of questions that you might want to ask. And so even that alone could be supportive to somebody in that situation. So there's many instances where it could be a good stepping stone in helping somebody understand, um, if you say to them, let's do cash flow forecasting. I've got clients that would run a mile because I mean, because of their history with money and because of their history full stop, and how they can't look into the future. It's too they can only see the here and now, and it's too fearful for them to be thinking about what the future may hold. And so we have to work through some of those things before they would be ready to say, I've got clients, sometimes even just income and spending, it can take months to get clear about what their income and spending is. And if you go straight in with what's your income and spending, what's your assets and liabilities, what are your, they're not ready for that kind of process. So it definitely can be a kind of stepping stone into that world. And then within financial services, so people who are regulated and operating in that way, of course, it's phenomenal to use. So some practices coach first, then they do their planning, and then they implement the advice. So the coaching for the beginning and really helping somebody understand what they want, understand and their profound goals, like at a deeper level. What does money mean to you? What what would be an absolute ideal vision for your life? Those things are beautiful to kind of articulate within with a coaching mindset, where you're listening and you're asking powerful questions to really help the client understand themselves better, and even questioning and challenging potentially. They might say, I want to retire early, and understanding what that means to them. What does that look like for them? So you're almost rehearsing the future for them, with them. So coaching works beautifully there, but that isn't the only place for it to be. And I think there is a danger that coaching is thought of as it's only working with people's emotional relationship to money, or it's only at the beginning of a process. Whereas actually it could be much more than that. My definition of financial coaching can actually be quite practical as well as dealing with the emotional. But if we just think about the coaching aspect of it, then all the way through the journey, in helping them understand the way they're managing money and communication with them and their partner and their kids, and giving money to the kids, and all the myriad of different individual little decisions that are being made. Every part of that is really helping them understand themselves better, and work through ways of changing behavior. And of course, we know times like we're having right now with the markets, we've got to be really, that's coaching in kind of helping people understand themselves and what's going on for them emotionally if they're troubled by the fact that their portfolio has gone down by 10-15%, and the impact that that's having. There would be the space there to spend a lot of time listening and asking more kind of thought-provoking questions to help them understand themselves and understand the emotions underpinning it.
So let's talk about the business side of this. I mean, I guess the first question is, how big do you think this market is? We know that financial advice mostly deals with the top 10% of wealth in the country. You talked earlier about the opportunity being available to people who might be in financial difficulties with the free services. How big is do you think the opportunity for financial coaching is?
Well, I think you've just answered that, really, haven't you? Like, if it's 10% of people are seeking financial advice, and maybe a couple of percent or 5% are seeking free debt advice, then really it's everybody else, because it doesn't necessarily have to be a big piece of work that lasts several years. It could be answering questions, helping somebody make a decision. Or helping them understand their money behavior better, or get into a habit of saving. Some people have never saved a penny all of their lives, and yes, there might be some financial constraints about that, but not even saving £5 a month kind of thing. So there are having some time with a financial coach. There's almost nobody that couldn't benefit from it. And then it's just a case of, how do we reach those people, and are they willing to pay for that kind of service? But I think there's an enormous market. If we think about all the orphaned clients from financial advisors that after RDR, no one was interested in servicing them anymore. Where have they gone? Who's looking after them? Have they got needs? Are they retiring at some point in their lives? Are they also trying to make decisions about whether they release some equity out of their property to help out their kids fund purchase their first property? What to do about they've got some capital and they're trying to make a decision about whether to help their kids out with student loans, and people have these decisions to make. And then, of course, we know that this is still quite a taboo subject. People aren't talking about money. Having a conversation with somebody that's focused on their financial lives is really important for most people. Almost nobody could not benefit from this. So I think the market is enormous. Personally, I always have believed that. And now, obviously in the last 10 years or so, hundreds of people are kind of joining this now. And I've trained about 150 people. So there's and Catherine Morgan is training lots of people. Tina Weeks is training people. So there's lots of people being trained out there that are delivering this. And I know some of the regulated financial advisors are also opening up kind of separate unregulated practices. So I think there's an enormous market for this. It's just kind of getting word out there. So the financial advice world is learning more about it, but the consumer world still doesn't know that financial coaching exists.
Right. And I guess the other question is, or part of this is, how does the pricing work typically? What do you expect when you're going to pay, when you're going to speak to a financial coach?
So different people offer different types of services. Some people are doing group coaching, some people are doing one-to-one, some people are offering kind of packages so that you buy kind of 6 sessions up front. That's probably the most common. I personally have always done a kind of pay as you go, because I like the transparency of that. One of my values kind of coming out of the financial services industry was to be 100% transparent with everything I do. I left the industry still at the time of commissions, and of course, I hated the fact that there was such disparity about the amount of money people were taking. And I know, of course, that's changed, but that it hasn't changed so enormously because we've still got assets under management that people don't necessarily appreciate how much they're paying for fees. So so for me, it was transparency was important, and I have tried lots of different types of pricing models, but I basically just charge fees at the end of each session with clients, and we work out a series of how we work together individually. So for some clients, we work together once a month. Typically, it will be we'll have an initial 2-hour session, then we'll work together once a month, perhaps for an hour. For a period of time. And for some people, that might be 6 months, and for others, it might be several years. And I have some clients that I work with for 12 years or so, which is kind of frowned upon in the coaching world. But I've got I've got a client who's a father of 5 kids, home educating the kids, or unschooling the kids, as they call it. He has his own business. This is his time to think about himself and what he wants, and what's getting in the way, or what action he needs to take to move forward.
Sorry, forgive me. Why is it frowned upon that you're working with someone for the longer term?
Because what you don't want to create is codependency. So
Right.
if they're relying on you to support them forever, then they're not relying on themselves. So you're so in the therapeutic world, in the coaching world, you wouldn't necessarily expect to be working with somebody as you would do with a financial advisor for the rest of your life. The rest of their working life, or the rest of their life, you have the same relationship. It may be that it's just a piece of work that you do with them, and then you're finished, and then maybe I have clients that kind of come back kind of 3 years down the line. Now they're a different set of circumstances, and they're now getting divorced, and they want to make some decisions, and something has come up also within their relationship to money that's not helpful thinking for them, and they want to kind of work through that. So they might come back from time to time, but I personally do have clients that I have worked with for years, and probably always will do.
Interesting. So if I put my entrepreneur's hat on, right, and I'm looking at this, blue ocean in front of us, of massive number of people that aren't currently being served by existing financial services model, would you object? But I need you, Simonne, as my, conscience, right? Would you object? I mean, we actually see traditional financial service company trying to come to this space. So Octopus coaching, for instance, is an example. I don't know a lot about their strategy and what they're trying to do, but my thought is: would you object to an established financial services company coming to this space, perhaps using technology, to make coaching and give people access to coaches, if there is an ulterior motive and an assumption that if this works out, right? So we charge people, I don't know, £50 a month for 6 months to give them access to a coach and help them walk through the issue, but ultimately they, I assume, are betting on, if this strategy works out, these people are going to need, probably some financial product at the end of the journey. What is wrong with that type of strategy?
I do worry about a conflict of interest. That part of the beauty of a coaching relationship that's outside of the advisory world is that you can support and guide somebody to make the choices that are right for them. And you can help them understand the financial landscape, you can help them understand products, you can help them without any ulterior motive. There's pure transparency and trust. And I think the minute you put the regulatory hat on. So I've got this hat, and now I've also got this hat, or I've got this side company that does this bit. Let's pass you on to them. I think there's a conflict of interest because you're, with the pure coaching side of things, I don't give advice. So, even within the mentoring, we don't work in an advisory way. So we're not giving advice about the right way forward for them. We're helping them understand that for themselves. So we're guiding and supporting with information and knowledge to support that decision potentially, but they're making the decisions. So if you then say, right, now we've gone through this part of the process, we're now ready for this part of the process, with my sister company or whatever it is, then that's the issue I have, is that it may not be exactly what that client needs or wants, but they're shoehorned into that route because that's the pathway of that particular organization.
Is the great the enemy of good here?
Tell me what you mean by that.
So I actually do agree with you that, having the coaching as, independent, uncompromised as possible is the right answer. But there's a reason why it hasn't taken off. That it's not well recognized, as you said, by the consumer and things like that. And that may well be that, vast majority of financial services just miss that opportunity, and eventually somebody is going to come to this space, and find a way to scale this. Maybe I'm thinking about this completely wrong, right? Um, but so it may well be that this is just, to me, it just seems like this is just an incredible opportunity sitting there, lying fallow. Nobody's cultivating it. And there is a reason why either new entrants aren't coming to the marketplace, or existing financial services group and going there. And somehow somebody's got to resolve that, I think.
Well, there's a lot going on already in this space, I think, and there's lots of apps that are bringing in financial coaches, and they're trying to systemize things and automate things. And I think it is the very nature of a coaching relationship is that it's a. I think it works beautifully on a one-to-one basis where you are really understanding that individual, and you're not pigeonholing anyone. No one's going into any box. Everything is absolutely personalized to that individual. The minute you start diluting that, I think you dilute the service and you dilute the quality. But no doubt that kind of stuff is still happening and still successful. And so I think it's my job, and it's the job of those of us kind of taking this forward to actually shout through the rooftops and let everyone know that this exists. And over time, I'm 20 years in now, and I've written a book, and I've done lots of media interviews and things, and it has kind of had some traction, and there is some traction in this, and people kind of, when people find my service, for instance, sometimes I get emails kind of saying, oh my God, I wish I knew about this 20 years ago. How my life might have been different if I'd have known about that. So I think, it's our job to kind of get the message out there to let people know that this is something on offer. But I guess there'll be all different kind of solutions to this, and we'll see how this goes. But this feels like, particularly as things, there's so many kind of robo advice type opportunities in DIY, that people are prepared to do things for themselves and do some of their own research. And you can go onto websites and research good platforms to purchase ISAs and pensions. And so in support of that, financial coaches can kind of help with that kind of journey if people are interested in that. But I guess it's just, we just have to let people know about this more.
Absolutely, and you've done an incredible job, over the last 20 odd years on that front. You continue to, and I have huge respect and admiration for that. So, Simonne, thank you very much for your time, for your wisdom, and for the incredible work that you've done. Thank you.
Thank you. Thank you.
I'll be remiss if I don't thank my incredible team who worked very hard to put this program together. Thank you very much, guys. I'd like to thank our sponsors, Timeline App, the retirement planning software, and Batefolio, the high-tech, low-cost flat fee model portfolio manager. And to you, our listeners, thank you for your time. I hope you've had as much fun listening to the program as we have making it. You can find more about the show at retirementals.co.uk, and you can follow me on Twitter. My handle is Abraham on Money. Until next time, thank you and goodbye.